There's a business out there for everybody. So what I do is I help you navigate the waters to figure out which lender is going to provide the best terms, the most proceeds, the most favorable deal. Maybe that's the reason to look at some sort of trust, because you probably don't have to do this stuff if you have trust. So I think trust will become more popular now.
Oh, wow.
Yeah,
Okay,
that's what I would think.
We're looking for business owners, people with business acumen.
I guess if they're starting to find this content and they see it, they're like, oh, okay, now I kind of understand
the
it.
overall theme of everything that we're talking about, like we talked about taxes a bunch, like the purpose of this episode is to talk about taxes.
Give you a little bit behind the scenes of what we do and what we're passionate about. My name is Beau Eckstein. I'm the host of the Investor Financing Podcast. Why everybody should own a business. Everybody should own a business. I mean, it's just like
I'm in this coaching program, so I will not let you fail, right?
I made those mistakes too years back, and that's why I try to educate people.
These people had one thing in common. They knew they had it in themselves. They knew they could be something beyond where they were. They were willing to put their time, their energies to better themselves. What you really could do with more skills, it's just remarkable. So I would like to just tell you a couple of short stories, and we'll draw maybe a couple of lessons from them. I would like to tell you of two women that each sold a business to Berkshire Hathaway, to me actually, for many millions of dollars. Both of them started with $2,500. By a coincidence, it was the exact same amount. It was everything they had in the world. And one of them was a woman who landed in Seattle in 1917, couldn't speak a word of English, had a tag around her neck. The tag said Fort Dodge, Iowa. The Red Cross got her to Fort Dodge, where she was reunited with her husband who had come to the country a couple of years earlier. And she lived in Fort Dodge for 2 years. And as she put it, she felt like a dummy. She couldn't pick up the language. She couldn't learn a word. And so she and her husband decided to move to Omaha. So they came to Omaha in 1919, and there she found a small colony of Russian Jews, so she started feeling more at home. And then as her oldest daughter went to school, she would come home, this daughter, Frances, and she would teach her mother the words she'd learned in school that day. And this woman, Rose Blumpkin, spent 20 years saving money, bringing first her siblings over, her mother and father, $50 at a time. She sold used clothing to do it. She had 4 children during this period. And by 1937, after 20 years, she'd saved $2,500. She went to Chicago and she bought what she could of furniture. Her dream had always been to open a furniture store. And this woman who had never gone to school one day in her life, with $2,500, but with the same spirit that the people in this room had about having a dream and working to accomplish that dream, she built a business which she sold to me in 1983 for $60 million approximately, and which did $1.5 billion worth of business last year. The 4th generation is working in that business. This woman, Rose Blumpkin, she worked for me until she was 103. And then she retired and she died the next year, which is a lesson to all of Berkshire's managers that premature retirement, you can't tell what's going to happen. But Mrs. B, with her $2,500, one further fact about her, she could not read or write. And she went into a furniture business, and she didn't bring anything unique in furniture, but she brought a determination to succeed.
All right. Welcome, everybody. Thanks for joining us. I love watching that Warren Buffett clip. It gets me kind of amped up every time. My name is Beau Eckstein, and I put on events regularly. My background, I work in SBA loan brokering. I also help people buy franchises. I've been in lending for 26 years now. There's a big need in the market as I got more into the business funding space to educate people about all the opportunities in funding out there. And so I brought a very good panel today to talk about business financing, alternative financing, and then SBA financing as well. So you guys are going to learn a lot about business financing. And if you guys have questions, feel free to go into the Q&A sessions. Don't raise your hand quite yet, guys. Go in the Q&A sessions. An idea came to me a few months ago. I do a lot of webinars and classes and things, and I thought about making this a quarterly event. I do another event, which one's coming up in January, called Business Ownership Summit, but I wanted to do a quarterly event called Business Funding Event, all about business financing, because it's the most powerful, utilizing strategies to really grow to take you from maybe the corporate world into entrepreneurship, right? A lot of us, we need the funding to get us there. And that's what Business Funding Event is all about. Just a little bit about me, 25, actually 26 years of lending. I'm turning 40, what am I turning? 47 on Sunday, I'll be 47. So I started when I think I was licensed when I was 21. So all right, we'll call it 26 years of lending. Been in residential, commercial lending, and now the last 6-7 years I've focused on SBA financing. I also have a company that does franchise consulting. I own 2 businesses right now. I invest in other businesses. I've bought and sold lots of real estate, fix and flips, rental properties, all that good stuff. I'm a California real estate broker, SBA loan advisor, and also have podcasts. I'm a member of Franchise Brokers Association, along with NAGLE, which is the National Association of Government Guaranteed Lenders. And my mission it used to be to help 10,000 aspiring entrepreneurs become successful business owners over the next 10 years. But I quickly realized that if I did webinars and classes, I could talk to many people. So I'm changing that number to 100,000 people over the next 10 years, because maybe I won't personally interact with them, but they'll go and watch my YouTube channel. They'll come to an event. So I think 100,000, and I hope to actually slash that and make that 1 million. I haven't yet done that yet, but that's a little bit about me. So without further ado, let's get Leo on stage here. Welcome, Leo. Thanks for joining us.
Hey, what's going on? Great to be here with you, Beau.
All right. Thanks so much for coming.
All right, perfect. Wow. I appreciate the response, everybody. Fantastic. So I'm getting the feeling that it looks like the majority of us are new. We're looking into entrepreneurship, and I love that story that Beau just shared there with Rose. There's a great podcast called Founders Podcast, and he did an entire episode on a biography by her, and I thought it was absolutely fascinating. And that's what I love doing. I love serving small business owners, especially new business owners, because when you're a new business owner, funding that business, not the easiest thing in the world to do. And so today I want to share with you some strategies to get funding for your business, including 0% interest up to as long as about 18 months to help you get your business off the ground. Been fortunate to serve tens of thousands of new business owners doing just exactly that. So the first question I always like to ask everybody, whenever you're going to go down this entrepreneurial path, which it looks like some of us have been doing for a while, but for sure, a lot of us, are new to business, new to entrepreneurship. And so when you're going down that path, you want to define what is your why, what is driving you forward. And I remember this is back in 2009. So it's about 15 years ago, right during the recession. And like Beau, I've been bought and sold a lot of real estate, own several $1 million in properties right now, Airbnbs by Disney World. But in 2009, I was losing properties. They were in foreclosure. It was a tough, crazy time. And I remember one morning, my wife heading off to the grocery store with our 2 kids at the time. Now we've got 5. And she calls me about 30 minutes later. Leo, I'm at the checkout. The card's getting declined. What's going on? And so I scramble, run to my computer, transfer a little bit of money that I've got left over in the business bank account to the personal bank account. And I tell her she's probably going to have to put a few items back. And she does that. And just remember how horrible that day was. And maybe some of you, have been through something similar. And I remember telling myself, I'm never going to put my family in that position again. And so I defined very clearly what was going to drive me through adversity, why I was not going to have our family in that position again. And the 2 things that I came out of it was, number one, I was going to, invest in education. I was going to invest in myself. I hadn't done that. And I was going to serve entrepreneurs and business owners. I love helping entrepreneurs launch new businesses, and I knew that was who I wanted to serve. And I wanted to be able to do it well, and I wanted to be able to create an epic life for my family. That's my wife and I are 5 kids. We've been married, I guess I should know this, 22 years, 22 and a half years there. And throughout that time, ups and downs, but the last decade, serving entrepreneurs has just been incredible. And that's what I'm all about. That's my why. That's what drives me: family and meaningful relationships, helping business owners. I remember, a few years ago, a young woman from Denver, Colorado was launching a beauty salon, and she'd saved about $20,000. She went to the local bank there. She got turned down, and then she applied with us, and I helped her raise her credit score 30 points. We got her $70,000 at 0% interest, and I didn't hear back from her for a minute. And then I bumped into her at an entrepreneur event. It was GrowthCon, actually, in Vegas, Beau, and lo and behold, she had 20 employees. She was buying her own building, opening up additional locations, and she paid off all of her funding at 0% interest. And just to know that I've been able to play a part there in helping her live her dream, create 20 new jobs, was pretty awesome. And that's the path that all of you are on who are already in the business of whatever industry you're in, or you are looking to launch one. So that said, how many of you are committed to making the next 12 months, let's say 2025, record setting? So if we're going to do that, how are we going to do it, right? What are we going to need? Well, coaches, mentors, and a roadmap, that's pretty helpful, right? Investing in yourself, books, seminars, programs, learning how to market, sales tactics, strategies, management, and of course, funding is going to be part of that as well, right? Marketing, lead gen, you've got to be able to bring in customers, clients, tell your story. There's usually a couple different ways. You can, do paid ads marketing. You can also build relationships and get free referrals. That's how we build a lot of our business, and relationships run the world. Are you going to need software, systems, and automation to make that happen? All day and twice on Sunday, right? You're going to need those systems to make things more effective, efficient. Virtual assistants, contractors, building a team. 2 ways to grow exponentially: leverage technology, leverage a team. It's taken me 20 years as a business owner to learn how important that is. And I'm telling you, that makes a difference. And sometimes in the course of life, we get stuck with some high interest debt, maybe a card or two with a high interest rate. And one of the strategies we share, especially with new entrepreneurs, is, hey, let's get you the money for your business, but let's take that high interest debt and move it over to a 0% interest account, save some money, and use some of these smart money strategies to build and grow a business. So there's a question, and I'm the oldest of 9 kids, grew up in a very conservative household. And I remember my parents always talking about getting out of debt. Now, they weren't really entrepreneurs or business owners, but they were always talking about how bad debt was. And interestingly enough, I find there's 2 types of debts out there. And one of them is personal, and the other one is business. Personal debt, let's define that: taking on debt with no expectation of a greater return. Would you say that's good debt or bad debt? Great example is, hey, I'm going to go get that massive big screen TV at Best Buy right before the Super Bowl. I'm going to pay 25% interest on that Best Buy credit card, and that's bad debt. It's not making me any money. It's not going to appreciate in value. It's going to go down in value. Not what we want to do. Business debt, taking on debt with an educated expectation of a greater return. Now we're talking a few companies maybe you've heard of. Google, they use creative financing long before they had an IPO to finance their business. One of my favorite stories, Kevin Plank launched his business with $40,000 in business credit cards and was able to take that business from, a very slow growth first year. Once he got the funding, got his product right. Now Under Armour is the #2 sports apparel brand in the world. There's another little company, I love the story, Nike, Phil Knight, and he used creative financing to build and grow Nike as well. So good debt or bad debt? That is good debt because I've got proof of concept. The odds are high I succeed, and now it's going towards something that generates an income. And not only does it generate income, but someday down the road, I might be able to sell my business. So I'm generating income and I'm building value. And that, my friends, is how Sam Walton built Walmart. Actually, he said he borrowed to the hilt, very wisely, to build each one of those Walmarts in Arkansas and some of those small towns, and the rest is history, and so forth. So here's a little case study. This was early 2020, right during before the pandemic. We had a bunch of live events, and we would help new business owners get financing, and that's what we were doing. And I remember, like yesterday, March, April of 2020 came around, and COVID, and it canceled all those events, and so we had to restructure. We had to do it very fast. And I'm like, all right, we're going to need a funding partner portal so that all these, different business coaches can send their clients in and have transparency, know they're being taken care of. We're going to have to invest in more virtual marketing events and lead gen online. And we're going to need better training, better technology to do it. And boy, this is going to cost about $25,000. But I had already, gone through the funding process. I had created financing solutions in case I needed extra money. I'd saved up money. And so because of that, those creative financing strategies, which Product of the Product used that to launch our business, we were able to cover those costs and make that investment. We did our first virtual event, I remember, in June of 2020. And every month thereafter, we started to grow and had record months right during the pandemic. And that was because we understood creative financing and generating a return, an ROL, if you will, return on loan, and it paid off tremendously. The result, 8-figure business. We've been fortunate to serve tens of thousands of business owners. And so now we know the difference between good and bad debt. We understand, what we are going to need to get our businesses off the ground or grow exponentially, 10x our business next year, make it our breakthrough year. In order to make that happen, now we got to figure out what's the best funding for me, right? And sometimes you go out there and you Google and you're looking at the options. And the good news is today we've got some SBA experts who are going to unpack some of those options for us. But at the end of the day, one of the things you want to have is access to revolving capital. It's available when you need it, and you can tap into those resources and options. And so when you're first starting a business, which a lot of us are doing, this month and in 2025, sometimes, like Kevin Plank, you're using some personal credit card stacking to get off the ground. You're looking at 5-year personal term loans. These are products that we help our clients get on the marketplace. You're getting that business entity established. And now that's a huge marker because now you can actually get some financing in the name of the business. You'll start off with 0% interest business credit card stacking, cashback rewards, so many different benefits we'll talk about later. That's one way to get off the ground. When you need $100,000, you go ask, for a brand new loan from the bank. And they're like, well, do you have 2 years of business tax returns? Do you have collateral? If you don't have those things, or the down payment, going to be very difficult. Even if you do, the loan doesn't always, cover working capital, marketing, and some of the expenses you're going to have before you generate a profit in your business. So that is a very powerful option. There are short-term merchant cash advance loans. Usually we want to avoid those. They're very, very expensive, but it is kind of the next step there as you have money going through the business bank account. We've got business term loans. We've got the SBA expert coming on later to talk about the 7A that you can use for startup funding. We got the 504 for equipment. That'll be exciting. And then obviously there's business lines of credit, revolving accounts, which give you maximum flexibility to grow your business. So that's the ladder. And what we've done in our marketplace is when somebody looks for funding options, they can look at those and get a free pre-approval, access to everything, and see what the best option is for them. So that said, I'm curious, for a lot of you, what do you think would be most effective for your business right now? Would it be a loan with a fixed amount, paying interest that you take out immediately, or would it be revolving credit, maybe with a 0% interest rate for as long as 18 months that you could then use as you need, but only pay on it when you use it? What would be best for you, revolving or loan? There's just a lot of flexibility when we can get that revolving money and use that to grow the business. And the interesting thing about that, and that is what we specialize in, getting access to for our clients, and we've, served tens of thousands of them. Number one, the revolving credit that you can secure at a 0% interest rate. These are credit-based approvals, so they're not scrutinizing, your last 3 years of tax returns. They're not asking for collateral, which makes it an easier process to get qualified for. It's much quicker too. Something that could take several weeks can typically get a pre-approval literally in a couple minutes, and you can have access to the money within 1 to 2 weeks. You only pay on what you use, right? And so if I have access to 100,000, but I only need 10,000 right now, I'm glad I got the other 90 in case I need it for opportunities and different emergencies that might come, but I only need 10,000 right now, so I'm only paying $100 to $200 a month, very affordable monthly payment. Okay, now I can tap another 10,000 2 months from now when I do my marketing campaign, when I hire some staff, I need to have working capital. And then it's open for the life of the business, right? If I get a loan, I pay the loan back. And then next year I need another one. Well, now I got to jump through the hoops again. I got to requalify. But if I have a revolving account that I can just tap, use, pay down to zero, and then use it again, that gives me a lot of flexibility. 0% interest. How incredible is it we live in a country, in a financial system where you can actually access financing to launch your business, do it at a 0% interest rate, and just like the entrepreneur Tara, her story, the beauty salon in Denver, pay it back at 0% interest, pay no interest, and use that as a tool to streamline and grow your business. Incredible opportunity there. And then there are these different cashback strategies we teach our clients about. In fact, on Monday next week, my son and my wife tomorrow actually are flying to a soccer tournament in Orlando. We are here in Utah, here in our office in Utah. And then the rest of my kids and I are going to fly out on Monday to Orlando, meet up with my wife and son Marcus, and go to Disney World, hang out for a week. And what's going to pay for all of that are our cashback rewards that we use to pay for business expenses. We pay no interest on it. And it's literally generates enough money to pay, you got a bunch of kids, it gets costly going to Disney World. And so that's the cashback rewards. And so a lot of people are like, are you sure? Is this real? Well, it's so real that I even brought some pictures of a couple years ago when we went. And the best part about it was we got to bring my wife's parents. They'd never been to Florida. They'd never been to Disney World. And so we got to bring them. The cashback rewards paid for that. And who would have thought that my mother-in-law, as my kids would say, was a savage, and she loves those roller coasters. She was just on every roller coaster, having a great time. So that's how real those cashback rewards are. And so for all of y'all who are like, all right, cool. So how does this work? Well, if you want to look at your options, here's why you can look at them today with no hard credit pull, right? There's no negative impact to your credit. We are partnered up with Experienced Soft Credit Check, so there's no negative impact to your credit. You can find out exactly how much funding you qualify for at 0% interest. We'll unpack how your credit score is looking and different factors there that affect it. And we do have, as Beau said, we've got a fintech platform that we launched to help small business manage their cash flow. So super excited to show you how you can get free access to that today. We've got a couple of other items too. And then, of course, just one-on-one, strategize, ask questions, get answers from somebody who has served hundreds of small business owners and secured millions of dollars for them. In our funding advisors, we have several funding advisors on staff just waiting to serve you and help you out. And so it's a very simple process right there. But again, they're the bottom line options. Well, it's very simple. There's a couple different ways that you can do it here. There's the link right there. So it's a simple 3-step process, no impact to your credit there. And then you'll look for a text message to schedule up with a funding advisor right there. Now, the reason why you know it's a soft credit check is because the form doesn't ask for your social. Anytime the form doesn't ask for your social. Now, if they ask for your social, then you kind of know there's a good chance it's going to be a hard pull. Now, after you fill that out today, and again, we've got the form there. Of course, if you want to scan the QR code with your cell phone, you love those QR codes. We got the dinosaur QR code there. But after you submit that, then you'll get free instant access to My Figures. And this is after helping tens of thousands of business owners, and Beau and I were talking about this the other day. So many businesses struggle with cash flow and how to track it and how to predict it and forecast it. And without cash flow, it's awfully easy to go out of business. And so My Figures is the platform that you get free instant access. You can test it out, connect some accounts there to it. And what it allows you to do is to manage all of your real estate, all of your bank accounts, all of your credit cards in one place without having to log into each one of them individually. Saves you a lot of time. And then it shows you your key financial indicators: money in, money out. What are your bank balances? That's shown right here. Any card balances. And then it gives you a breakdown of your last 3 months of profit and loss. There's an investor entrepreneur. His name is Don Valentine, and he's a co-founder of Sequoia Capital. He invested in a few companies you might have heard of: Google, Apple, YouTube, PayPal, and NVIDIA, just to name a few. And he said that in business financials, there's two things that matter: high gross margins and cash flow. And so that's what this platform does, is it helps you to manage those items so that you make good decisions in your business. So for most of us, we didn't learn a lot about money and credit. And so we thought, well, why don't we just create a free portal called Credit College, where you can track how your credit score works, what you can do to strengthen your personal credit and your business credit. And so everybody that applies today, looks at their free pre-approval, we're going to give you access to Credit College and the Business Funding Formula digital copybook that I wrote a few years ago. You'll get access to that as well. Just a couple free gifts of value. There's some case studies in the book about people who, started businesses, how they use this funding formula to make it happen, et cetera, et cetera. So the couple free gifts for everybody. And we want you to share Credit College with everyone, because we're on a mission to eradicate credit disinformation once and for all, so that everybody can have a high credit score. The real heroes in our business are our funding advisors, over 1,000 5-star reviews online, A+ rating with Better Business Bureau, because they do everything possible to listen to clients and provide the best options, including 0%, so they can grow and scale their business. I love that quote: money is a terrible master, but an excellent servant. And that's why we're all here together today, is to make money our servant and not our master. What options are available if your personal credit is not so good? Well, there's a couple different options. Number one, that Credit College platform is going to give you some different insights and actions you can take. We also have a third-party credit repair company we work with. But oftentimes the fastest solution to still get the money is to find one friend or family member. I remember a gentleman who had a trucking business, and he didn't have good credit, but his father-in-law did. They joined up. Father-in-law had the good credit. Son-in-law did all the work. They built a $10 million a year business, and we got them about $150,000 in funds to help them grow. And so that's usually the fastest way. Who's that friend, family member, partner who can come join the business that has good credit?
Thank you so much, Leo. That was an awesome presentation. It always gets me fired up.
Let's
Started
go.
with Warren Buffett, and you rolled that out. And yeah, guys, some people had asked, these programs are generally just for people that reside in the U.S., because I know there's a couple of people on here from other countries like UK, so forth. But generally, we're just doing funding here in the States. And without further ado, we're gonna bring Kerry up to the stage. Him and I are gonna kind of do a Q&A session on SBA financing. We're gonna talk about what types of real estate are fundable, what types of businesses are. I've been doing SBA financing for 7-8 years now. I do a lot of franchise startups. I do a lot of startup businesses. I do a lot of real estate deals. Kerry's an expert in SBA 504 as well as 7A. His bank, they specialize in commercial real estate SBA deals. So they'll do deals, you know, all the way from 3 to 400,000 with a small 7A up to, you know, $18 million deals, $15 million deals. They have the capability with the 504. The reasons I love SBA financing on a business acquisition, they can finance 90%, up to 90% of the total costs. Flexible use of funds, favorable terms, franchise friendly. They do support first-time business owners. No early payoff penalties on loan terms that are 10 years or less. If they're amortized over 15 years, there is a prepayment penalty. You can leverage retirement funds for your down payment or your equity injection. They also have some resources that do some mentoring and help with business plans. You can use it to acquire business, and they're getting more and more aggressive to make loans. Now, however, I will let you know that a lot of times businesses, they run, the reason they fail is because they're out of working capital, right? Like 38 or something percent of businesses fail. So you need to know all of this and you have to put it together. That's why, you know, having Leo and then also talking SBA is so critical, right? Because you have to, just because like the way I'm going to tell a story real quick. I used to flip a lot of houses. I went over on a construction job and it was like another 50 grand and I didn't have the cash. So what did I do? I charged up my personal credit and my scores dropped down to 580 and I wasn't able to get any more capital, right? And I got stuck. That's when I realized the value of learning the credit game, right? What Leo's group teaches you guys is how to build, you know, how to utilize personal credit to then build business credit. And then you get, so today, fast forward, I keep my credit pristine. I use all the tools Leo talks about, keep my scores as close to 800 as possible. And now I'm able to have all these different lines of credit that are, when I charge them up, they're not in my personal name. I sign a guarantee for them, but I can charge them up. Utilization lowers your scores by a third. So you could have never missed a payment like I did. And my scores were down into in the 500s, right? And we know we have to play the credit game and then stack on the points and the software Leo's company has. You can see, this is how you can get ahead in this world. Because a lot of people are like, hey, I'm stuck in my W-2. I live paycheck to paycheck. So the tools of understanding credit are like the number one thing to excel. And then we want to build you up, and then I want you to be able to work with you and Kerry so we can go buy a self-storage facility for $15 million to get an SBA loan, right? And we got to start somewhere. So that's why the business funding event was born, was to like help people in any stage, and even people that have SBA financing. You know what? They run out of capital. I have a lot of scenarios like that. They can't get another SBA loan. We got to go get them. We got to get them working capital. So we need to know how all these tools play together. So Kerry and I are going to talk about SBA financing. Kerry's been in SBA for 16 years. He's an accountant by trade. But Kerry, can you give the lay of the land on the SBA programs? Just start with the 7A and then we'll talk about the 504.
Sure. Well, Leo, that was a great presentation. That's a hard act to follow. I don't have any fancy slides like that. But anyway, the 7As and 504s, as far as the mix goes with SBA, 7A is a flagship program. There's by far more 7As than there are 504s. In fact, an 80%, 20% split. And I think the biggest reason for that is 7As are more flexible. And the way a person decides whether to go with a 7A or a 504 is normally based on loan size. The 504, like at our bank, we normally like to see the amount or the total project cost of $2 million. Where 7A, we'll do a 7A loan for $300,000. And speaking of flexibility, the 7A will finance working capital. It'll finance a business acquisition, or if you're buying a new business, if you're buying an existing business, there's a term called goodwill or blue sky, or as we refer to it, the business airball, and a 7A will finance that. If there is not enough collateral within the loan itself, or if you're not getting any real estate, the SBA does require that if there's outside collateral available, then the bank has to put a lien on it. Only up to the amount of the loan. So, I mean, that's one drawback of 7(a). On a 504, normally the subject, 504 loans are for fixed assets, real estate and equipment. And normally the subject assets are enough to collateralize the loans. So 7(a), they both have pros and cons.
So we're definitely going to do Q&A, but let me give it a little bit more depth on SBA financing. So SBA financing can finance startups. It can finance business acquisition, business expansion. And so I'm going to give a couple hints with Carrie. So on a business expansion, Isaac was talking about owning I believe he owned a plumbing company. So if Isaac wanted to expand his business and his competitor down the street was selling their plumbing business, when it's the same NAICS code, which is basically the classifications of businesses, if he was to go buy another plumbing business on an expansion, we can get up to 100% financing with SBA. Now, Isaac's got to have good credit. He's got to have outside income that supports outside debts. And assuming that the business he's buying is cash flowing from a debt service coverage standpoint, you get 100% financing on expansion. That's when you're in the business already and you're expanding by either growing the location or buying another business. So that's one use case. The other use case is Isaac wants to sell his business and I want to buy his business. And he wants to sell his business for $1 million. I can, if his business cash flows, and I can get up to 90% financing. So I can get a bank loan with an SBA guarantee for $900,000. Well, I got to come up with $100,000. I can actually have Isaac carry back 5 to 7.5% of that down payment that I was need to come in with for the equity injection on full standby, and I can come in with 5% to close. So on $1 million deal, I can close with $50,000. I could also bring in a partner that puts up the $50,000, and if they own less than 19%, they don't have to be a guarantor of the loan. So there's a lot of ways you can be creative with SBA. I also finance franchises. So on a franchise startup, you can fund 80 to 90% of the total startup costs with franchise financing. There's a lot of caveats behind it, but the point is there's a lot of things you can do with SBA as long as it's an eligible business. And if let's give an example. Isaac wants to buy a building for his plumbing company. Isaac can get an SBA 504 or 7A loan to buy that building. Potentially on a 7A, get up to 100% financing. On a 504, get 90% financing. So there's a lot of use cases. As long as Isaac business occupies 51% of that building space, then you can use SBA for all of this stuff. So there's a lot of tools in your arsenal with all these different business funding sources. Carrie, just talk about some of the deals you've funded this year or deals you're working on, just to give kind of a flavor of what's possible with the 7A and the 504.
Our bank is kind of restrictive on certain industries like hotels, gas stations, and car washes, but there's a lot of other industries we take a look at. For example, 7A loans. I'm actually doing a loan right now here in Texas where it's an oil re-refining business where they take used motor oil and refine it into other types of lubricants. So that's the type of business you can finance with a 7A loan. 7As are great for office condos, medical office condos. In fact, you can get 100% financing for those. Some banks are comfortable with that. Let's see what else I've done. I've done as a 7A, a fertilizer manufacturing facility in Louisiana. And so let's see. As Beau said, our bank does a lot of franchise financing, but we can only do franchises with real estate. Daycares. I funded quite a few daycares, and I mentioned self-storage. But other lenders will finance gas stations, C-stores, hotels. Some of the businesses you can't finance, anything to do with gambling, anything that's speculative like real estate investing. There's certain industries you can't finance with a 7A. But if it's a for-profit business, and Beau mentioned if it's real estate, if you occupy 51%, 7A is a very good option. And if it's a much bigger loan, the 504 is a great option as well.
And you can also do new construction. So Carrie's bank does a lot of new construction. So you can build at self-storage facilities, pretty much anything that's eligible. You can build restaurants, anything brick and mortar. A lot of people do, you can also do rent replacement. So you're a CPA and you're leasing space, and then you can go buy a building or build a building. So there's a lot of cool things. Now, SBA doesn't, I don't know if I said this, SBA doesn't make the loans. They guarantee a portion of these loans. A 7A is just one loan. The difference on a 504 is it's a first and second loan. The second piece is actually the guaranteed piece. And so it's a little bit different process. A 7A can be underwritten directly at the bank and doesn't need to go to SBA. A 504 is two loans. The second loan actually gets underwritten by SBA. So, but Carey's Bank funds the first and second piece initially. So what I do as an SBA loan broker is I work with banks like Carey's and several others. So when I get a unique scenario, I know, okay, this is going to be a good fit for Carey's Bank. Oh no, this is going to have to go to a non-bank. There's also non-bank SBA lenders. Oh, this is a business acquisition with no collateral. It's got to go there, right? Or if they're looking for certain cases. You can have up to $5 million of total SBA aggregate. You can have several SBA loans if you qualify. And on a 504 loan, we can do deals as big as $20 million because it's a first and second. The second is the SBA piece. So once you run out of your $5 million aggregate SBA, you can actually do what's called the SBA 504 green, and you can get up to $16.5 million in total SBA aggregate if you're doing it that way. So the point is there's a lot that it is a little bit complicated, but it's really simple once you really understand it. So the best bet is to get with a good banker, or first come to me. I'll help you out, and we navigate the process. And it's very, very simple. And so like a lot of people have the misconception that SBA is really complicated. Carey, can you talk about like when you get a new deal in and like how fast you can give a LOI, which is like a letter of interest and a loan commitment?
Bo, that's one great thing I like about our bank, because normally if I get a new deal, run the spreads, the cash flow and everything, usually get an LOI out the same day. I've worked at other banks where it takes a week to get an LOI out. But basically what you need for an LOI, if say you're buying a new business with real estate, you usually want 3 years tax returns, then the interim, when I say interim, I mean year-to-date financials. And we'd like to see a personal financial statement on the borrower and a debt schedule for the business. And just with those few documents, and if there's a business plan, and if it's a new startup or anything, if there's an expansion, a business plan is a big help as well. But just with those few documents, normally most banks can get an LOI out, which is basically it's not a loan approval or a commitment. It's just basically a pre-qualification, saying that the bank is interested.
Yeah, so it's really not that complicated once you get inside. A lot of people say, oh, SBA is very difficult, this and that. You can figure out if it's a doable deal within a day or two, typically. I mean, now granted, there's some complicated deals, but generally you can. All righty. I think we got all those questions for now. If there's any, feel free to put them in the Q&A. Yvette, excuse me. We are buying a service-based franchise. Can we get SBA funding for that? It will be a startup in our territory. You come to the right place. Yes, you can. And so there's a couple questions I ask. Generally, most banks are going to fund about 80% of the total cost for a franchise startup. So I can help you. I do several of these per month. I am also work as a franchise consultant, so I understand the whole space. It's a fairly simple process. We need 3 years of tax returns for yourself, a resume, business plan, projections. You have to have good credit. Typically, you want to have 10% post-close liquidity. So I'm going to give an example. Your service-based franchise, the total investment range is $200,000. On that deal, generally, we're going to fund 80% with an SBA loan. So you're going to need a 20% equity injection. It's the same thing as a down payment. So we're going to need you to come in with 40 grand. And then after you put the money down, we want to see what we call 10% post-close liquidity. So we're going to want to see $20,000 left over, and that's post-close liquidity. Generally, we want a 680 credit score. Generally, we want to see outside income that supports outside debts. Generally, we want to see utilization under 35% on any of your revolving credit. We use something on loan amounts under 500,000. We use something called the SPSS credit scoring system. It was designed by FICO specific to SBA loans. So I can help you navigate the whole process. There's a lot of content on my YouTube channel. If I can share that with you as well, but happy to meet with you. Go to bookwithbeau.com and we can dive into that.
Hey, Beau, I see a question here. How do SPA brokers get paid?
Good question. Most of the time, so there's a lot of caveats here. Okay. So on most 7A deals, I get paid by the bank. I don't charge any fees. 95% of the deals. With certain banks on loan amounts up to 150,000, there's a processing fee. For the small deals, they don't pay referral fees or anything. I'm being transparent on how we make money. On some 504 loans, we do charge on a portion of the loan. Sometimes we don't have to. So generally, 80% of my business is 7A, and I probably don't charge on 80% of my loans. I'm getting paid a referral fee. On some cases, there is a fee. So it varies on the type of loan and the bank itself, if there's a fee or not. Because obviously, what I do is an expertise in this business. Because I'll just give you an example. I had a laundromat startup. They weren't buying real estate. They had no experience in the laundry business. They owned no real estate. The total cost of the project was $1.2 million. They just had the cash and a little bit of reserves, but they had no collateral. So anytime a loan amount's over 500,000, SBA guidelines, it's a requirement that we look for outside collateral. It's okay that you don't have it, but if you do have it, they will look to make up for that collateral shortfall on loan amounts over 500,000. Under 500,000, they don't have to do it. Now, do certain banks overlay that and ask for additional collateral? They do. So that's what I do, is I know how to navigate this whole system. So sometimes there's fees, but most of the times there's not. Hope that helps. I can't give you a definitive answer without knowing the scenario. But what I can tell you is that your deal, if it's doable, it will get done, and you'll most likely get better terms. So if you paid a broker a fee, it wouldn't be the worst thing for you, because you're probably going to end up with a better terms and a better and approval versus maybe not getting the deal approved. But a lot of times I don't have to charge a fee, to answer your question. If you're a lawyer firm for immigration, I don't really understand your question, but there's something called the E2 visa program. If you're coming to the States, you can, we work with immigration. Sometimes people invest in franchises and businesses so they can come to the States on an E2 visa. That is not eligible for E2 visas. Aren't eligible for SBA financing. You have to be a citizen or a permanent resident. Good question. Hi, Jessica.
Yeah, could you repeat which Brew was referenced for the business credit score or even personal, like for?
Sure. So for SBA loans under 500,000, most banks use something called the SPSS. It's a small business scoring system. It was designed by FICO to streamline the SBA approval process for loans under 500,000. And then for personal credit, there's three. I don't know what. Can you? What were you asking, Jessica, on the personal credit side?
Well, I mean, I guess the personal doesn't matter because everyone knows it's the Experian and Equifax and TransUnion. But yeah, I just wanted to know the small business one.
Yeah, Jessica, generally, like, kind of a reference points. I would say if your credit's like 680 or better, and you have like, a mature credit history, you have trade lines, and your utilization is not all charged up, like you have, utilization's under 50%, preferably 30, then that's people usually fly through. I don't typically have a problem when I know somebody's credit background, and I usually have them go to freecreditreport.com, or Leo's got a service, I think, through one of his groups. But generally understanding the dynamics of the credit, but it's pretty liberal. I mean, it's pretty, if I have a service where I check my credit all the time and I know what's going on. But I typically don't have problems. Now, there's also something called the SBA Community Advantage Program. Now, I don't really refer many of those deals, but they're not as credit score driven. They still need you to score from an SPSS credit scoring system. So generally, like, how I help is people book a call, and I'll discuss their like situation with I'm trying to do a franchise, and I can navigate that and give them advice. Whether I can help them today, maybe not. Sometimes I have to tell people, hey, look, it sounds like you're not ready. for an SBA loan. But then that's why we also talk about alternative financing. And Leo's got programs where he can help with, with the credit and all that stuff. So wherever you're at, I want to be able to give you at least some advice to get you started. I have, there's groups that will help do business plans with you for free, like SCORE, which is a nonprofit. And so I'm actually a mentor with SCORE here in Las Vegas.
Oh, great. Thank you.
You bet. Dwight, did you have another question?
I did. If it's okay, can you guys hear me?
Yep. Go ahead.
Blue, between you and Carrie, you guys mentioned the green, SBA green and potential stackable in SBA. I don't know if that's the right term, up to
All right.
$60 million. And the reason why I'm asking, because I have an
Sure, Dwight, let me ask you a few questions if you don't mind about this. I heard your questions before. Well, so what's your group's buying a business for $12 million?
Yeah, it's an aerospace company just south of Nashville. It's got assets.
Okay. So are existing owners staying on, or no, you're buying them out completely?
They will stay on for 36 months, but we will have ownership of the company. We're scaling it into the defense space.
Okay.
But it cash flows currently about $2 million a year, which will cover debt service.
All right. So to answer
I'm struggling with the $5 million cap for SBA cap, but I hopefully there's an alternative.
All right. Well, how much seller financing can you get, and how much equity can you bring in?
We're asking. He's willing to bring in 20% seller finance.
So he's going to carry back 20%.
Yep.
And how much can you guys bring in?
As little as possible.
Well, so where is this business located? Like what is it, a rural area or?
I don't know if that's considered a rural area or an 8A area or not, but it's south. It's like 20 minutes south of Nashville.
So okay, it's probably not in a USDA area. So there's something called a USDA BNI loan. That's a USDA we can do, but we have a mapping system we use, and if the population is under 50,000, it could be in the USDA BNI area. This would be a deal for a USDA BNI, and I can help you with that.
Okay.
If but generally you're gonna, collectively, there's got to be 20 to 25% between the equity injection and the seller financing. So but to the same regard, like your sponsorship team, the borrowers, you're gonna have to there has to be could we negotiate where there's seller financing and then you guys only come in with 5%, possibly.
Okay.
But also your resumes and your financial statements and everything need to warrant that the structure would work. But yeah, it's doable. Just go to bookwithbeau.com.
Copy that. I got it. I'll make an appointment with you. Thank you, Blue and Carrie. Appreciate it.
All right, $12 million loan. Who's got a bigger loan that I can fund? Come on now. All right. If there's any last questions, feel free to fire now. Oh, there's a question. All right. What are the best funding options or strategies available for a tech startup like I Need, which connects customers with local? We're incorporated in the US and have US-based co-founder, and our fund are focused on building a scalable platform. However, the company hasn't generated revenue yet. So, okay, Artur, if I'm saying your name correctly, as long as your co-founder here in the US and the business is domiciled, as long as he's owns over 51% of the business, then SBA financing could be a viable option. He needs to the business plan needs to be vetted out. You have to have a strong business plan, and you have to have some money to put in. If you're looking for $500,000, plan on if your total cost of the startup is 500 grand, your group would need to come in with about 100. They would finance about 400,000. You're gonna have to come in with about 20% of total project costs, assuming that we put all the pieces together. They're not going to fund 100% on a startup. Paul, SBA loan for a new bar with liquor license. Okay, both partners have their own businesses with great credit. Yeah, that's SBA financeable. The restaurant industry and bar industry, we would have to navigate and find the right bank. Not all banks like hospitality, but yes, we do these types of deals all the time. Business plan, projections, all that good stuff. We can definitely help you. I want to open a law firm. Oh, I think I did that one. I know I want a business, but don't know what the best business option is for you. Anonymous attendee. maybe if you're here in the US, or, you know, anywhere, a franchise might be a good business for you. And so my other hat that I wear is we help people find their ideal business. So if you're here in the States, go to bookwithbeau.com and I can walk you through how we help people find their ideal business. What's the website name to book with you again? It's bookwithbeau.com, and my name is spelled B-E-A-U, bookwithbeau.com. YouTube channel, if you go into YouTube and just put in the search bar Investor Financing Podcast, you'll find the podcast. Carissa, do you have recommendations of specific business credit card companies that are good to start with? Good question. I'm sure if Leo's group can help you with that. I have Chase, Wells Fargo. I don't know. I probably have 15 or 20 cards. I'm not the expert in like the points and everything. I do have Capital One Spark. I like that a lot. And I have Chase. And then I have a couple lines of credit with Wells Fargo that are good.
Yes, I have a cleaning business and that I started this year. So I'm trying to see how do the loan process can help me in my business.
Sure. Okay. Hey, Sheila, this is Beau. So Sheila, do you have decent credit?
No, it's in the 500s, I think.
Okay.
The last I checked.
All right. And time in business is how long?
I just started in May of this year,
So how many months have we done? Like 6?
about 6.
So, well, one thing is obviously, I'm not going to preach to you, but we gotta try to get the credit up. Like having good credit is so important. Like when I go to a bank now, you heard us earlier when I was talking with Leo, or when I go to a bank now, because I keep my credit pristine, there's tricks of the trade, but I can go even with a new LLC and because I have such good personal credit, I can go get a business credit card, 10, 15, 20 grand, without even having revenue yet, just a new business entity. So having good credit gets you much lower interest rates, all that stuff. So first we got to go, okay, what's on your credit? How do we slowly fix it? So then we can get you up into the 700s, right? Because that's going to help you because you want to expand your cleaning business. So,
Correct.
so like if there's something like low hanging fruit that you could start fixing right now, but once you get your credit scores up, I don't know how long time in business, but generally, like right now, the financing that would be available for you would be the expensive financing, which is called MCA, Merchant Cash Advance. And you have to have enough revenue deposited for them to want to do a deal. They're going to want to see at least 15,000 a month in revenue deposited into your bank account for that. And MCA is like kind of usually like sometimes you're doing it because you're going to make money from it, but that's like kind of the worst case scenario. A lot of merchants use it because they need fast cash, but you might not even be in a position to do that yet. So I think potentially maybe you have bring in a partner that's got good credit. Look at your credit report and see how you can fix it. That's really the advice I would have at this point.
Okay, that's fine. Thank
No
you.
solid advice at that. I think it's solid advice, but nothing I could do today.
That's understandable.
But if you have any questions, reach out. I'm happy to sit with you and give you some feedback.
Yes, sir, I sure will. Thank you.
You bet. Let me just do one more question. I'm stopping after that. I'm looking to purchase a property to run a campground with a personal use dwelling on it. Can it be used for SBA? Potentially, yes. It's got to already have the campground on it, I would say. That would make it easier. So but to answer your question, there's a lot of SBA loans that are made when there's a residence and then there's a business on the same property. It can be done, yes. First time starting a business, we have the name for the LLC ice cream shop and a business plan. My credit score is 750. Wendy, that could be SBA eligible. So you can definitely go to the link we put in the chat for Leo's group and see what they'll do from because there's going to be pre-qualified, right? Without pulling a hard credit inquiry. You can definitely do that. I'm happy to talk with you as well, Wendy. And we can look at all the options. SBA is viable, assuming that you have a good business plan, outside incomes that supports outside debts. Then yes, it's very viable. All righty. Well, guys, thank you so much. This was fun. We're going to do this every quarter. January 25th, we have Business Ownership Summit. If you're interested in owning a business like a franchise, we sometimes talk about business acquisition, mostly franchising in that space. So if you guys just go to my name, which is beaueckstein.com/events, beaueckstein.com/events, that'll take you to all the events I'm doing. Bill's, you don't see him, but he's I call him MacGyver. We do a lot with internet marketing. So we sometimes do events on how to grow your business with virtual assistants and AI. So we've got one of those coming up, Business Ownership Summit. We do a lot of SBA workshops, franchise workshops. That's kind of the space we play in. So I hope you enjoyed today. We're trying to just educate everybody. I know it's been a long hour and a half of talking about real business loans and things, but I hope you got a lot of value. Carrie, thank you so much for joining. I did most of the talking, but you're always a great guest, and Leo knocked it out of the park. I'm here to help, guys. I have a mission to help 100,000 aspiring business owners become successful business owners over the next 10 years. So I hope some of the 200 plus people that were here at one time, some of you are those people. Thank you so much, and we'll see you soon. Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.